Hey folks, this is your host Mandeep. It is Saturday, July the 22nd, and I'm going to do another tutorial today. And in this tutorial, instead of looking at scans, what we will do is we'll take a look at the current market conditions and try and gauge a few key levels where there could be potential support for the market. So the other thing that I'm going to do is I'm actually going to provide you with a free script that's really useful and that tells you how much the market has corrected from the recent 52-week high. So as you can see in the case of the NDX index, the market has corrected about 13.9%. So anytime we're below 10%, that means that we are in a correction territory, right? So the Nasdaq is in a correction mode for now, and we'll see where it ends up. So one of the key things to look for is prior support levels or prior breakout levels, right? So as you can see, this level that was established close to 14,430 is where the market bounced last time in October. Now, whether that happens this time or not, obviously, nobody can say with any level of certainty. But it is entirely possible that we might breach this level and then recover and retake this level. If that happens, I might look at adding some long positions at this level. Now, if this level doesn't hold, the next level to watch is this level, which is around 14,000, right? So this is the a previous breakout level. Now we can also take a look at the Qs, right? The which is basically the Nasdaq 100 stocks here. And it's going to be an exact replica of the previous chart that I showed you. So again, 350 is the key level to watch, right? And again, we'll see how the market reacts to this level on Monday. And one of the things I've done is I've also added or overlaid with the ultimate trading strategy signal. And as you can see, the UTS was fairly prescient in getting us out at a decent level. It got us out close to the 396 level, and we are currently trading at 350. So it saved you a fair amount of pain, assuming that you were long a lot of stocks. Now, you can also look at this on a shorter time frame, like on the 4-hour time frame. You'll see that the last level that we got stopped out was 401, and then more recently it triggered a short signal here, which is currently up by almost $20. So in case you play the market both long and short, you could have profited nicely while sort of staying out of trouble through this entire area. And I've also overlaid with a signal that I provide with the UTS system. This is a crossover of the 9 and the 21 period moving average. And as you can see, once the 9 crosses below the 21, it's not a good spot to be on the long side. And here we can see what is happening on 4 different time frames. So as you can see, it has already flipped on 3 different time frames to the downward direction. And the fourth one, it seems to likely happen because when you have this kind of technical damage done in the market where the stock drops below 50, 150, 200 period moving average, then it takes a lot of sideways action before the market starts to turn back again. So not to say that we will not get any rallies during this time. One of the things that happens in a bear market is you get some vicious sort of short covering and squeeze rallies. So those are always great for people who are trading the market. So let's take a look at the SPY chart as well. And one of the things we had on the SPY chart was a number of these gaps that I've marked in yellow. And it was just a matter of time before these gaps would eventually be closed. And we're very close to the last gap, and if that closes, is close to the 435 level. And in this case, as you can see, we've corrected 8.7% right now, and 10% correction would take it down to 431. Whether that happens or not is not what I'm predicting, because I have no way to know how the market is going to react um, in the coming week. The last one we'll take a look at is the IWM here. And in case of IWM, we've had a much larger correction. It's already corrected close to 20% here. So you can see this is where once it broke this, 10% correction, we also had a nice sort of short signal that got triggered by the system. And following the system, if you're trading the 4 hours, you're actually up nicely, about 20 points. And this trade is still going. And 20% correction would take it down to 195.77. Now, let's take a look at the Netflix chart as well, just because this took it had a major hit. And as you can see, if we're obviously looking at the 4 hour chart, and the 4 hour chart got a short signal at uh, uh, close to 538, and it's up now 121 points. So I'm just saying it for clarity purposes, that there's no software, no algorithm that can predict earnings and how the stock would react. All this was telling you was the stock was technically weak, and I still wouldn't have taken this short, right? So, but let's take a look at the daily chart. Now, the daily chart, you can see that it got you out at 672, and since then it's been in a downward trend, and we're close to 387 as of last close. Now, we can also take a look at a few other stocks like Amazon, and just see where the UTS system got you out. So it got you out at 35.40, and since then it's been in a downward trend. Clearly, there were short signals in smaller time frames. As you can see, there was a short that got triggered here, which is up 275 points, which is like huge profit, assuming you play both the long and the short sides. Let's take a look at Google. Again, we had a short signal that got triggered on the 4 hour time frame. That's up $113. So again, from my vantage point, you have to watch what these key levels are in the market and see how the market behaves at that point. Now, one of the stocks that caught my eye was Nike, because one of the things I noticed, it had corrected, as you can see, 20%, and then it actually showed some strength on a week tape. So this is one stock that I want to keep an eye on in the coming week. The only stock that I'm currently long is Nvidia, and the reason or the rationale for taking this long was that I'd been watching this gap, which was open for quite some time, that recently closed. Right now, I just have a startup position in this stock, and the 200-day level is close to 219, which is, I mean, that's something that I can manage. If it goes down, it'll still be in the risk parameters that I follow for any given trade. So always have like some of the basic averages plotted, and usually simple is enough. So you can just plot the 50-day, the simple 150-day and the 200 period moving average, and look for sort of key reversals around that, for the major indices to start with, and see if the market then finds some footing. So hopefully we have a better week, and I'll put this script up on my blog, and I'll put a link in the description section. Hope you have a wonderful weekend. I'll talk to you soon. Bye bye.